So there are two main types of life insurance products. You got term and you got whole life. And something Katura said that I've heard before with is buy term, invest the rest, right? And that it has its place. It has its place, right? So we'll go through what's the difference. Term insurance is the most straightforward form of protection. Clients generally pay premiums monthly or annually, and they are there to protect their family for a term, right? That's the reality of it. So the typical uses of term insurance are to help provide for families' loss of income, cover short or long-term debts and routine expenses in insure if the insurer dies in within the specific term of that policy. If you go one day out of the term, so sorry, so sad. Providing additional insurance protection during child rearing years. Provide protection to help pay off mortgages or college education expenses. The most common duration of term policies are 10, 15, 20, and 30 years, right? So those are your term policy uh, limits or time frames. Um, what is whole life? Whole life is the permanent life insurance product that um, product protection, right? A whole life policy is contractually guaranteed not to lapse as long as the required premiums are paid on an annual basis. And when I say annual, I mean every year. It could be monthly, it could be quarterly, it could be every 6 months, or it could be once a year annually, right? And so that keeps the policy enforced. Besides permanent life insurance protection, a whole life insurance features cash value accumulation, which allows for clients to build a cash value in the tax deferred basis, right? So when you think life insurance, you normally think, hey, it is for death benefit. But the product names itself, life insurance, right? So in addition to the cash value, accumulating cash value, the participant policy insured is by mutual insurance companies. That's key. Mutual insurance companies also provide the opportunity to earn dividends. Now, dividends are not guaranteed, but are part of the premium that reflects a company's favorable operating experience, right? Some people say buy term, invest the rest. That is one way of creating wealth. But I believe that when you're creating wealth, you gotta diversify. So buying term, buying whole life to cover of income, and also investing in stocks and real estate helps you diversify over multitude of areas, so that you are able to, if one fails, you still have the rest, right?
Gotta pause there. Hold on, Karim. Hold on. So you said a bunch of stuff. So one thing, okay, which is key, I heard was mutual fund, not a mutual fund, but a mutual company. When you want to get in life insurance, you want to use a mutual company, not to get it confused with a mutual fund company, right? Just so I just want to. You gave us a lot of nuggets, and then also the because people ask like you think like mutual fund, mutual company. A mutual company just means can you share or elaborate what a mutual company when you say mutual company, what are you referring to?
So mutual company is owned by the policy owners, right? We don't, they don't have stockholders. They don't, none of those things who are controlled by the outside entities or is even affected by the ups and downs of the market, right? Mutual companies the policy owners are the bosses of the company.
Come on.
The they are really the directors who direct how the company uses the funds that are allocated and over allocated based on how the money is accumulated.
Sounds like ownership to me. So you saying so when you get a whole life insurance policy with a mutual company, the policy holders own the company, And that's ownership is what I hear. Okay. Just
Yeah.
wanted to make sure I'm hearing correctly.
You sound like you hearing,
Okay.
you don't need any hearing assistance right now. You good. All right.
Okay.
All right.